Good morning, everyone. It is February the 18th, 2016, and time to kick off another trading day. Crude is up. We're trading the April contract in crude now. Went front this morning. The E-mini is up. The Fed's bullard yesterday told everybody that an interest rate increase was not coming in March, and that QE4 is out there when needed. So Bullard's the man behind, responsible for a lot of rallies. We've got option expiration tomorrow in treasuries and equities. The 10-year favors a close between 130 and 131, which would make the close at 30.16 mathematically. The 30-year is 62 to 67. That gives us a 64.16 close for the 30-year for planning purposes. And the E-mini, yesterday they bought 1925s, 40s, and 50s. On the call side. So it would make a close around 40, give or take. Puts were 1850s. Was where the play was, so that's out of reach. The puts are set. So that's where option expiration takes us the next 2 days. The crude oil talk overnight was friendly about getting a deal with Iran and Iraq, but as long as Iran doesn't have to cut their production, you'll see they'll keep talking about it. And we had a draw on the APIs, looking for a build of 3.2 million barrels today in the EIA report, even though the APIs drew last night. Okay, today's news: jobless claims, 270. I have seen 275. Philly Fed minus 2.5. That can come in lower than forecast. LAI minus 0.2. Now, nobody really pays a lot of attention to LAI because of the interest rate component being close to zero, and crude inventory build of 3.2. So I think that option expiration is going to hold. We'll have a trading range. We're going to play for a close at 16. First sell is 15 to 19, followed by 23 to 27. First buy is 5 to 9, and then 01 to 29. And we'll see how that plays. Not afraid to buy it today, but I do think the first trade is a sell, on the assumption that the E-mini is going to continue to rally. The squeeze is on. Okay, looking at the 30-year, we've got volume at 64.10. Got yesterday's lows at 30, so 64.16. Pretty close. Looking for an option close. We're right there. So 29s to 1s buy 1, and then 17s to 21 buy 2. First sell is 19 to 23, followed by 27 to 31. And I do think the first trade is a sell. Gold is off overnight, risk off. No need stock markets going up. No reason to own gold. You can see that it's kind of right in the middle. So this 1210 area has been a sell, as has the 15 area. Oh, we pretty much where we've been. Sell 1 and then 10 area plus or minus, sell 2, 15 plus or minus. On the buy side, we had the buck to 02. We just touched it last night, so we'll leave that the same. And don't think gold will break hard given all the stuff that's going on around the globe. Okay, China's been busy this week devaluing the yuan. Got to keep that export business going. It's funny, you read an article about how China is transitioning to a service economy. It's if they are, it won't be by choice of the government. Okay, 1075 buy 1. You're going to do what they do best, and that's sell their labor on the cheap and manufacture for everybody else. They don't have to worry about pollution. So get it on. Okay, we've got this break right here in the market in the 111.15 area. Last rotate up and X stopped at 15, so 15 to 25, sell 1. 50 plus or minus, sell 2, buy 1. Basically, it's 107.10, 107 even area. Excuse me, 107.70, 110.75. God dang, I have a hard time with this new scale. My eye hasn't gotten used to it yet. Crude oil, we're in the April contract now. It is trading significantly higher than the March contract, about $2 higher. So we're going into from contango to backwardation, and when you have that, the market's saying, well, you know, you can buy it today for this, but if you want to buy it down the road, things might be a hell of a lot better, especially if we get a Iranian Saudi deal. So we're willing to sell it to you, but at $2 higher. So 33.75, 35, sell 1. Excuse me, 34 even, then 34 and a quarter, 34.50, sell 2. On the buy side, 33, 33 and a quarter, buy 1. 32.50, 32 and a quarter, buy 2. Now the second the March contract expires, this premium is going to come out of this contract and it's going to roll down to the spot month. And on to the E-mini. Okay, we're in this high volume area right here. You can just kind of see it on the screen. 1900 to 45. Auction play yesterday was 1925s, 1940s, 1950s. That would favor a close tomorrow somewhere. 1940 plus or minus. The high volume number is 2350. We're currently at 2825. They do make us pay up to get long. We got volume yesterday at 2350. So our first buy is going to be 20 to 25. Give it a little bit of room. Then we had the breakout from when we're going to make it 15 to 10, picking up this area over here for buy 2. Okay, the sell zone is going to be 34.39, sell 1, 44.50, sell 2. Jobless claims 269. Philly Fed come in lower than forecast, minus 2.5. LAI minus 0.2. Natural gas draw 154 BCF. Crude a build of 3.2. Writing with the mouse, sometimes you don't know what you're going to get. And right now, if you want to limit sell out there, 1949.50 is where you could probably put it and do pretty well. Okay, going to take a bit to get everything up and posted. Get busy on that. Going to be back with you as soon as possible. Good afternoon, February the 18th, 2016. Time to recap today's trading. We came in today really seeing the market trading both ways. The easiest trade to see was failure to take out the overnight session high. So we came down with one leg in our move, pause, move pattern that we like. And the first trade that set up really well for us was this S right there. It had everything going. All the ducks were lined in a row. And a trade 2 to 4 bars before the opening of the day session works pretty well. This was a continuation of that trade, and even on this one you got a scratch when you came in. Mean green trade, first time back to the mean green line. It's a great trade. We were able to get it on that bar. Then we just kind of went into chop. Pretty slow trading. Had a couple of we had a winning trade here off of this B. Had a losing trade off of this retest failure here. Had lousy trade location. Got stopped out on this bar right here. Market went down. Good S trade here. Good B trade here. Then we get a head and shoulders pattern that produces another really good trade. Again, you can just see the games that are being played. They got stops beneath that bar's low, and then the market comes right back in. So pretty choppy trading, not a lot of follow through, not a lot of volatility to deal with, but still, if you didn't become selective and if you took all the trades as they presented themselves, even after this chop period in here, you'd have been a pretty happy camper. Selectivity kills. Pretty simple. Tomorrow's option expiration, that favored, my guess is it's going to favor a close at 1925. I got a higher low and a higher high, so we can buy tomorrow. We can certainly sell failure to take out resistance, and resistance is in the 1920 area right now. But the F2 screen will be different than the F1. The F1 says it's okay to buy it. This screen is a B, a weak B, because volume is well above time. But if we fail to, we had a breakout here in the low volume numbers in the 12 area. So we're going to put our first buy, let them get stops beneath today's lows. We're going to make it 9 to 11. Then we had the breakout down here from 1900. We're going to make our next trade like 1902. On the sell side, the first trade is going to be 20 to 20. And let's make it 20 to 25, sell 1. Then 29 to 34 for sell 2. I don't have an estimate for it, but tomorrow we're looking at CPI, core CPI, and option expiration. And my guess is it's going to show that favors a close at 1925, pretty much where we were today. Okay, the biggest open interest, and it'll still be there tomorrow, will be at 2000. So you see calls at 1900, 1925, 1950, and 2000. And you'll see puts at 1800, 1850, and 1900. So the market maker would actually do the best with a close tomorrow at 1900. He wanted to zero out as much as he could. Make it expire worthless. That's what makes option market makers happy. Countering this, according to Zero Hedge, we have the biggest short interest in the stock market that we've seen. I think, I forget what the year was, but it was a long time ago. Okay, an inside day on the 10-year option expiration yesterday favored a close between 130 and 131. I imagine that'll probably be the case today too. And it'll take some help from the E-mini to change that. Very, very strong P, very, very strong close. We're still working our way higher. So we're in our sell zone right now. The idea that 31, so we're going to sell failure to take out the buck to 04, then 7 to 11. And to break out, I think it takes help from the E-mini. The London high was 21.5. I period started at 22. J period is 25. So 21, 25. Now, if the E-mini is selling, we don't want any part of the short side. Period. If the E-mini is rallying, selling against the buck, this 131 area right here makes some pretty good sense. And buy 2 will be 13 to 17. Looking at the 30-year, strong market, strong close. We're still making new highs, so we're going to sell failure to take out 12 to 16. Again, we do not want any part of the short side if the stock market is crashing. Sell 2 will be 23 to 27. The buy side, last rotate down was 31. We're at 09, so 29 to 01, buy 1. And then 17 to 21, buy 2. Got to pick up this volume area right there. Okay, we had the Venezuelan central bank devalued their currency. Which country is next to come? Nigeria, Ecuador, Argentina's already devalued theirs. China is whittling away at it. Gold is very, very strong. So which country will devalue next? So this F1 favors finding a place to buy it. Still trading up. So selling failure to take out 38 to 40. Then I'm going to jump it up to 49 or better. Strong market. On the buy side, 31 to 29, buy one. And 23.25, buy two. Okay, and crude, like we've talked about many, many times, the only country that consistently would cut production and give up market share was Saudi Arabia. No OPEC, sometimes Qatar, sometimes Kuwait. Usually those three would be about it. The rest of them took Saudi Arabian, Qatari, Kuwaiti oil sales and decreased those three's market share and increased their own. So it's really, really difficult to get these guys to talk to each other. They're very, very nationalistic. They do what they can to protect their dirt or their country, so as you'd expect them to do. We also have expiration tomorrow of the March contract, and the April contract will converge to March prices, so I think the market is set up for short, but that may not come till Monday. Hard to see how there could be a squeeze in crude where people have to buy their way out of the ring, so I favor the short side coming into tomorrow. F2 confirms it, as we said several times today. Limit buy at 31.55 to close the gap. We'll give you a bounce. So we're at 62 right now. I'd like to sell it a little better. I'd like to sell against 33, so we'll make 33, 33 and a quarter. Sell one. 33.50 to 75. Sell two. On the buy side, 32 even, 32 and a quarter, buy one. Then our 31.50, 31.75, buy two. Okay, I believe the euro is headed below 110. Well, duh. And again, it doesn't stop it from rattling. When China devalues yuan, this currency usually rallies. Not 100% of the time though, but you can see we're getting lower highs, so the screen favors a sell. And we're definitely dealing with a B on this split, volume and timer match. So I split out Y. You can see that volume is a tick above time. So 110.75 is support. Buy one. Do like the short side better. 10.50 buy two. On the sell side, 11.15 to 11.25, sell 1, and 45 to 55, sell 2. And that's it for February the 18th, 2016. I will see y'all bright and early in the morning. Y'all have a great day. They lowered it. We're not going to make 80 today, Chuck. They're now calling for 75. But I am going to definitely get out there. Y'all have a great evening. See you bright and early.